Okay, you ready to move on to the next slide?
Yep, I think it's just a quick look at pricing for everybody else that's here. So yeah, that's the ugly picture that I hopefully work to straighten out with all of our clients here at the bank that we lend to. But it gives you just a picture of some of these little 3-month moves, almost all of which since 2011 are really just driven by these mill hike letters when they're trying to increase pricing. And if there's some disastrous news, whether if it's just geopolitical or something financial related in the U.S., we'll see some of these big dips to 10 or 15% drops. Right now, we're really hovering. The market's been so quiet the last 2 days. Actually, no one's been quoting anything. People were buying steel as high as $670 a ton only 2 weeks ago, out as far as to the end of 2013. Today, people are looking for quotes in the high 500s.
Do you think the GDP numbers that were recently released have had an impact?
Oh, for sure. Oh, for sure. Sadly, if we went back 2 or 3 years, we'd all just be focusing on typical supply and demand numbers. As we're in an age of better technology, social media, more heavy media coverage, it seems that people make more emotional decisions or exacerbated decisions. So when we get something that comes in that's bad news, it does tend to impact the market faster than it used to. You can kind of see that in some of these price moves. We can go on to the next one, which I believe is the aluminum slide. Oh, the macro. Okay, this is perfect. So as Jeff and I were just kind of chatting about, most everything has really been driven by news headlines as of late. We have a couple different places to look. China is the gorilla in the room. Depending on what metal you're talking about, they're both producing and consuming anywhere from 40 to 50% of the material. Their purchasing manager index printed at 50.6. They're expanding, but really not at a clip that as exciting as it used to be. I think that we'd love to be growing as fast as China is in the U.S., but obviously we're a more mature market. And right now, we're getting a little bit of cloudy data kind of across the board. I think the one interesting headline to watch is Japan. Now that they have their new government regime in place, they seem to be very almost like gung-ho of printing themselves out of this. They're trying to jumpstart growth there. It's been stagnant for decades at this point. It's a place to watch. If they continue to devalue their currency and really push forth and try and get some production and exports going there, that could have some impacts for us. Europe has always been really negative here the last year and a half. Things don't continue to get much better there. They've had very weak growth. You hear kind of deteriorating social conditions, whether it's in Greece, Italy, Spain, pretty nasty unemployment problems, both among young people and then folks that are older that actually can't find new jobs or don't have the qualifications to find new jobs. It is kind of a sore subject here in the U.S., especially in certain regions, but in Europe it's considerably worse, up to 2 or 3 times as much. But the odd thing, going against all this negativity, the euro has actually strengthened pretty considerably, even since the beginning of the year. It had a low point of about $1.20, and right now we're 135, 136. So they think that the rate is very high. It could have further negative implications for Europe. And everyone knows in the auto space, despite things growing here in the U.S. and then in China, a lot of the sales numbers out of Europe have caused a big problem, for the big companies locally, because they've just been way off target for what they've seen the last several years. Here in the U.S., we see the news every day, we feel it every day, and we have some conflicting data points. The trade deficit was considerably worse than expected. GDP also down, but for some reason we have seen a little bit of an uptick in housing prices. So it's really hard to kind of wade through the weeds here to see exactly how healthy the U.S. economy is. Equity prices, stocks are way up, so people's retirement accounts probably going great. But they remain pretty nervous because jobless claims are also still at elevated levels. towards the end of next month, we're going to have another round of very important budget negotiations. You know, the debt ceiling was a big deal, but we'll continue to watch that. But it's still pointing to a bit of, you know, stagnation. I'm not sure how much more easing that the government can engage in. A lot of the headlines are asking, you know, when is this going to stop? And I don't know how long they can kick the can down the road. All of these things point to a gray picture, but from my view, with the exception of China, a relatively negative picture.
If it was a rosy picture, Tony, and we saw housing starts go up, and that would pull the appliance market with it, it usually does, which requires more steel and automotive because we're coming off such a terrible, terrible base of a couple of years ago. We continue to sell more autos. Is there any point you see where we'll be chasing any shortages in the metals market?
I wouldn't say a shortage, but you could have a tightness in the sense that if things start ramping up maybe towards the end of this year, if we really climb out of this mess, and capacity utilization still at the, you know, mid to high 70s, we really could have a big swing in pricing just because people are going to be feeling better, they're going to be spending more. I wouldn't say that we're going to get back to the scary number of, you know, like $1,000 a ton, but we could see ourselves very closely approaching that 800 level again if we don't have production kind of going full tilt, and if we've exhausted our foreign resources, or at least our imports, then yeah, I mean, I think that a $600 to $800 ton move is very, very likely.